it's time to get our portfolio queries answered by our expert. And before we get connected with our expert on the show today, let me also flash our WhatsApp number and email ID where you can send across your question. Because if you want us to do your life financial planning, any financial goal where you want to check your financial strategy, if it is aligned with your goal or not, all you have to do is just send across your questions. 865-797-4571. The Money Show at etnow.tv is the email ID where you can send across your questions. Okay, so now to do your life financial planning, I'm joined by Anil Rego, founder, CEO, Right Horizons. Anil, hi, good evening and welcome to the show. Let's take Paramjeet's question. This is via email, Anil, and he says that he's got Access Small Cap, HDFC Defence, ICICI Pru India Equity Fund of Fund, and a lump sum he's invested in this particular fund, and the rest of these funds is 2000 SIP. He also has Motilal Oswal Mid Cap, Bandhan Small Cap, 10 years time period, and the goal is 1 CR. Right now he is okay, so it's Paramjeet Kaur. So she says that it's hers and husband's joint account and joint investment. She's 48 years old. Okay, so she definitely needs to step it up. But then how are the funds?
Yeah, so I think fund-wise, he's and his spouse is probably pretty good. Okay, the issue is in terms of the exposure to small caps. Also, there is this HDFC Defense Fund. So in some form, the risk level that he's taking is a little higher than So as long as one is a very high risk profile, this is something that one could look at. Yes, there's India Equity Fund, Fund of Fund Direct, which is something that one can hold. Similarly, the Motilal Oswal Mid Cap Fund again is something that one can hold. I would think that the Access Small Cap Fund, we could probably move to an ICICI Pru Large Cap Fund. Okay, and you keep in mind that you have the HDFC Defense Fund. Whenever you invest in sectoral funds, and that is something you would already seen huge amount of volatility in this period, especially for defense companies. So now that is something which you need to time both the entry as well as exit. So I would think that in a phased manner, as some of these stocks do well from the sector and they expect to do well, one could probably exit in a phased manner over a period of time. Okay, Bandhan Small Cap Fund is the other one that I think one can hold for now. Okay, so this is what I would suggest in terms of, yes, he's got a good long-term type of focus there, and should be able to achieve this.
Okay, so concentration in HDFC Defense Fund, so one has to be really particular over there and maybe just keep checking the performance of this particular fund, and it could be slightly risky as well because of the concentration factor. But then having said that, if it's a long-term view, do keep on reviewing your fund every 6 months, and then you can take a call whether you want to continue investing it or not. Let's move on. Let's take Dilip Kumar's question from Kolkata. And what is the difference between tax treatment of balance advantage and equity savings fund, and which is more tax efficient is what he wants to know. I don't think we have him on the phone line, but a very important question. And in fact, thank you so much, Dilip, for asking this question, because why you, a lot of other investors can get this query answered. So yes, because balanced advantage fund have a mix of equity and debt component. Anil, what is the taxation post the change that we've seen?
Yeah, so even pre-taxation, what was interesting was on the balance advantage funds, most of them, actually have an equity taxation. Okay. Now you may wonder how, because they could go below 65%, because 65% is the trigger point for the classification as an equity fund, right? So how can one do it? Actually, what these funds do is they would use some bit of arbitrage, right? So it's like almost like an equity fund plus an arbitrage fund. Together, the combo of which goes above 65%. and that's how you're able to achieve an equity taxation. Okay. And now what is interesting is, a similar mechanism is sort of also used by the equity savings fund as well, even though they may have a much lower, equity exposure. That is something which is there. Of course, if you also see, between pure debt and equity funds, there's also an intermediate. So any funds which are not equity will also come with the taxation benefits out there. So between both the balance advantage and the equity savings fund, there is not much of a taxation difference that you would have. So to that extent, taxation should not be the reason to invest between one of the two. Yes, balance advantage fund being a hybrid and typically a dynamic asset allocation fund, as markets go up, it goes into debt, it becomes conservative. As markets comes down, it goes into equity. So it's like buying low, selling high automatically. So that sort of works well. The equity savings is slightly more conservative. So I think the ideal thing would be for more conservative investors, equity savings funds can be used. It can also be used by investors who are can look at a little bit debt plus, right? So I think that's a good place where people want even lower volatility than balance advantage fund. But on taxation, there's not much of difference for you to look at it, or look at the difference between the funds between on a tax basis.
All right, let's move on and let's take Chaitanya's question. Okay, so he recently sold real estate and he's sitting on good cash right now. He has a decent portfolio in equity market which he bought during COVID, and he would like to invest almost 2 CR in a secured fund that can give him a return of 12 to 18%. Never invested in mutual funds, and he will be investing, or he'll stay put for 10 years in this particular instrument. Very interesting question. Thank you so much, Chaitanya. And 12 to 18%, is that really practical to expect that much from a secured investment? Is that even possible, Anil?
Yeah, so I think at least the 18% side, that side of it looks high. And typically, I think it's good for investors to have an expectation for this type of a moderate to high, say 12 to 14%. Okay, because part of it you may also use some funds which are either hybrid or debt. Okay, now considering that Chaitanya has invested for the first is investing for the first time, we've been a little more conservative than what we would be for other investors. We've also added the first fund I would typically add is a balance advantage fund. Okay, and so I would look at a HDFC balance advantage fund, and I already explained the dynamic asset allocation fund. So it manages well. So this is, I think, can be one. So in case he needs any liquidity in between. The second I would go back to is, say, to look at a large cap fund, which is, let's say, an ICICI through large cap is something that one could do. So HDFC balance maybe 10%, ICICI large cap maybe 20% of the portfolio. And then next one would possibly move to a flexi cap. Okay, a flexi cap fund. And considering first time investor, I would suggest maybe a 30% and look at possibly a Parak Parik flexi cap fund. Okay, and subsequently both mid cap 20% and small cap 10%. Mid cap I would suggest Motilal Oswal mid cap, and Nippon India small cap, for the small cap segment. So this is the distribution that I would look at. At the same time, considering that you're investing lump sum, considering that you're investing for the first time, I would look at doing it through the systematic transfer route. Now, what does that mean? I would put it all of it other than maybe HDFC balance advantage. The rest of them, I would put it into a respective debt fund from the same fund house and do a systematic transfer over a period of anyway between probably about 16 weeks, 4 months or so is something that I at this point of time one will look at. If one wants to be conservative, then maybe the mid and small cap you can even keep it for something like 6 months, okay, and do a weekly systematic transfer from the respective, say, ultra short term or the liquid fund. from the same fund house into the equity funds that I just mentioned.
All right, so that's a plan for Chaitanya. And with that, it's time up on the show as well. Thank you so much, Anil, for taking time out and helping our viewers with their portfolio queries today. Thank you. And for our viewers, I'm going to leave you with our WhatsApp number and email ID. Keep sending us your question, and we are here to do your life financial planning on the show. Thank you so much for watching. Goodbye.